What's going on, everybody? It's Stock Picks by Tim, back at you again here, and I want to get into a couple stocks. I'm going to get into one that I haven't really talked about in a long time, and we're going to start off with that one, so let's go. And make sure you check out the links below for some free crypto and stocks. Alright, so first off, TTCF. Looking over Tattooed Chef's chart, it looks like we are starting to consolidate. We have been on a downtrend, tries to come back, and looking at it now, I think it's at a great time to get in, and we haven't seen this come under 1090. Okay, so anywhere around like 11, I think that's a great time to potentially get in. Now, zooming in a bit, you will notice that this stock's getting a lot less volatile, and this is called a VCP, or volatility contraction pattern. And if you don't know Mark Minervini, I suggest you look him up, because it's swing trading, riding the momentum, setting stop losses, something a lot of retail investors don't like to do. It's typically always preached to buy the dips, average down. And that's great for stocks that you're fully convicted in. But, when it's something that you just hear a YouTuber talk about, it might not be a bad idea to set a stop loss and ride that momentum up. But you have to wait for the momentum to turn and go up first off. And I think we have an event that might just do that for Tattooed Chef. We do have their earnings coming up here, and we're going to look over the last few. So let's zoom out a bit so I can see them both. Now, the revenue estimate is going to be only 51 million. And this would actually be less revenue than the previous quarter. And when you look at the previous quarter before that, you're talking about a reported revenue of 50 million. Then we went up to 58. Expectation was 63, almost 64 million. And now we're here with an expectation of 51 million, which would, if they can get that, meet that, or exceed it, they would beat their earnings 2 earnings ago, but they wouldn't beat their last earnings. So that's not a good sign to see that the revenue isn't steadily increasing. But I'm hoping that they will surprise us here. I'm hoping they were under promising and they're going to over deliver. And if we can see, at least 55 million, if not, beating this 58 million, we need to see that. And if we can see this revenue get, a nice boost, maybe 55 to, beating that last quarter, this could be what Tattooed Chef needs to start rising to the top. And you'll notice though, we've got this volatility contracting, going in. The volatility is calming down. We're getting a nice tight pattern here, a nice tight trading, which this is basically, kind of a supply and demand thing. And of course, things could always change. There could be a huge news article that comes out that just totally throws off technicals, and you got to realize that. But if you don't currently have Tattooed Chef, it might be a good idea to wait for their earnings just to mitigate that risk. Now, of course, if they just beat it out of the park, sure, you're going to miss out on that opportunity. If they miss their estimates, that means you're not stuck holding that bag, or, having to average down. So maybe wait for the earnings, see what kind of news we get. And if it's good and that momentum starts moving to the upside, potentially set a stop loss and ride that momentum up. But if you are convicted, of course, you're buying the dips, you're buying it in zones that you like. And that's perfectly fine. There's definitely different strategies that you can implement. And it also depends on which stock. If you have something you're high convicted in, like I said, you want to average in, you want to continue to average down, you have a 5-year time horizon or something, that's fine. But if you're just riding momentum, which, side note, right now is a hard time for that kind of trading. Right now is, we're in kind of somewhat of a bear market. And the only way to ride momentum right now would probably be in the energy sector, oil and things of that nature, just with the whole Russian-Ukraine conflict right now. So you might want to look into something like that and set a close stop loss, let it run up, and then change it to a trailing stop loss, perhaps. But that's definitely one way to do this, one way to trade. So before I ramble on much further, I just want to look really quick into some of their fundamentals here. And running down here, you notice that they have cash of 129 million with a debt of 9 million. So that's a pretty good ratio. I like that. I like seeing that. Now, one thing you got to think about though is their price to sales is 4.7, which this is a growth company, I understand, but that is still a bit high. However, it is lower than it's traditionally traded at. I mean, at one point we were at 17.5 for their price to sales. That's pretty high. Although there are companies that are trading at a higher price than that. So we want to see that revenue increase. We want to see this price to sales come down a little more. And also their price to book as well is relatively high, but it's still lower than it's traditionally been, which is a good thing. So my main worry with this is I would like to see that price to sales come down just a bit. And I would also like to see that revenue definitely beat by a bit, because if it doesn't beat by more than 5 million, we are in a downtrend in revenue, and that's not a good sign. And next up, looking at BNGO, or bionano genomics, we have a date that you have to look out for, and this is going to be on Wednesday. All right, and I'm going to read this real quick for you guys. And of course, I'll leave the link down below if you want to read it yourself. Now, this was as of March 3rd that they announced this, but their date is going to be on March 9. So keep an eye on that on Wednesday. The same with Tattooed Chef's earnings. Wednesday is going to be a pretty busy day. So we've got news here that bionano will present virtually at the 42nd Annual Cohen Healthcare Conference. Eric Hallman, which is the CEO, is scheduled to present a corporate overview on Wednesday, March 9th at 11:10. So keep an eye on that, and I will leave you guys a link below so you can just quickly access it. And the presentation will be available on the events page of the investors section. So I'll leave you guys a link below. Save that link. Make sure you tune into this. It'll give you more information about bionano. I can't get enough information, I can't get enough of these. I love doing my research. I love looking into, just every little detail that I can about the stock. So make sure you look into this. It's going to explain their OGM or optical genome mapping system. And also, as a side note, they just released their earnings, and I will leave you guys a link below for that as well. I have a cut up version of their earnings call, so you can get more information on it. Now, hopping over at BNGO's chart, you will see that we are starting to trade sideways. We get this little bit of sideways action, although this is still a bit of a downtrend, you'll see. And then we had a pop, downtrend, downtrend, sideways. Now, I would much rather buy this in sideways action than buying this on a downtrend. Okay, so think about that. Right now, I think it's at a pretty good place. I mean, we zooming in really quick, you'll see that we hit this level. We hit this level and bounce quite often, although it could always come down further. I do like this where it's at. And also, as a side note, the RSI is a bit oversold. Although the MACD is bearish. The MACD is still curling down, still bearish. So, and also the candles aren't able to hold over the 3 EMAs, the 13, 8, or 21-day EMA. So we might fall down further. We might even retest, this 164, 150 level. But keep an eye on BNGO. I'm in it for the long term, and I think it's a great time to average in. We are trading this most sideways we have in quite a while, so that's a good sign. That's a good sign. I mean, just look at this. This downtrend had a nice little pop, downtrend, downtrend, nice little pop, downtrend, downtrend. Small pop, you might argue, next is the downtrend. We might come into a little bit more of a downtrend. I'm extremely comfortable adding BNGO, and this is my one genomics play. I'm not a big medical field guy, so this is my one genomics play, and also I do have some AQST still, Aquestive Therapeutics. They are expecting their FDA trial to be approved at some point. This quarter or next quarter. This is just a waiting game with that one. But that was another one you might want to look into. Also, Genprex, they do have FTD, Fast Track designation for their product, and I will likely give you guys a video on that one. I haven't talked about that one in a while. Might give you guys an update on that soon. Haven't talked about it. Alright, and finally, I want to get into Chpt or ChargePoint. Now, this one today has been running quite nice. We actually hit $16 and started petering off. Now, if you're just swing trading, getting in and out, this might be, we could probably expect a red day tomorrow. Lately, things are very quick to take profits. This is not risk on. Everyone is quick to sell. So consider that, when you see a stock up 11 to 15%, either some big news happened or it's a little bit of a gamma squeeze, a little bit of a short squeeze going on. Shorts are trying to cover. So keep an eye on things that are, up 10 to 15% in this current environment. You might want to be quicker to take profits. However, I'm going to continue to hold ChargePoint. I expect 20, if not $30 into the year. Now, as for ChargePoint, they also released their earnings, and I will leave you guys a link below for that as well. So check out BNGO and check out ChargePoint's earnings. Familiarize yourself more with these stocks. I think it's very important that you tune into the whole earnings call and listen. Try to get the kind of, I guess you can't say body language, but try to get the kind of get the feel for how the CEO sounds. Is he a bit shaky? Is he very confident sounding? How are things going? So looking at ChargePoint, we are up really nice. We are now looking bullish. The RSI is becoming overbought, so keep an eye on that. We are starting to come down. It was up about 11, 12%. Now we're about 10%. So, we might come down a little bit more. But as for me, I'm very, very confident in ChargePoint. This is a long-term play for me. And, if this doesn't pan out like I expect for the end of the year to see $20, $30, I would be okay with that. And I would continue to hold, if not average through further. Now, I currently wouldn't buy at a local top, but at its current price, I am still happy with it on the long term. I think anything under 20 is worthy of averaging in, okay? Anything lower than 15, though, I would average in a little bit heavier. Anything above 20, I'd probably consider, trimming 5% of my profit, trimming 10% on the way up. Especially in this kind of environment, I would say it's best to take profits quicker, sooner than later. But that's basically my thoughts here. We hit a base of about 1140 and then just started bouncing. We bounced 3 times off that base. I doubt we're going to retest it. If we do, though, you know what I'll be doing. I will be averaging in quite heavy at this price. But that's basically it for you guys. Make sure you like and subscribe. I put out videos every day, and I've got another video coming out here tonight. But thanks as always, guys. See you next time.